today I'm going to be talking to you about how you can expand your loan portfolio, giving you an overview and showing you how LKCS can help you target new leads and get you more loans. Before I get too deep into the presentation, for those of you who may not be familiar with LKCS, we are a full-service marketing company and have been in business since 1961. We cater specifically to financial institutions, and we provide a wide array of services, from credit prospecting and alerting, which we're going to cover today, to statements, websites, social media management, direct mail, and many others. So if you have any topics you think you want more information on, please feel free to reach out to me or anyone else from our sales team, and we can get you what you need. So now I'll go ahead and get started. So debt is rising. As I'm sure you're well aware, factors such as inflation have caused the cost of living to skyrocket. For many, this has been offset by putting purchases on credit cards and paying only the minimum payment, leading to them compounding debt. As of this week, the average credit card interest rate is 24.26% according to Forbes Advisor Weekly Credit Card Rates Report. While this number will vary from person to person, it is easy to see how quickly and greatly this can increase somebody's debt. So this begs the question, what can you do to help these consumers and at the same time improve your interest income? So first, let's take a look at credit prospecting. So what is credit prospecting? It's a type of proactive marketing that allows you to target your account holders and/or prospects. We are able to target your specific account holders as well as target people that live in your specific area that may not be account holders, or even do a mix of both. What we are doing is targeting people for refinance opportunities. So people that already have loans but are currently not with your institution, and try to get those moved to you. Additionally, we can target new loan opportunities as well. So we can look for people that meet the right criteria and demographics for a certain product or service you have. And from there, we can try to reach out and bring in that loan opportunity. And best of all, it's all based on actual credit bureau data. So we are actually using data from the three credit bureaus. And I will get into this more as we go. But before I get into that, I'm going to go over what the credit bureaus are and why we use all three, as well as go over some of the ground rules that have to be followed when using this pre-screen data from the credit bureaus. So again, we are going to purchase the data from the bureaus, and we use all three of the credit bureaus. So we have relationships that allow us to provide data from any or all three of the three major bureaus. Why we feel this is important is that not all of the bureaus will have the information on everybody at once. Basically, what I mean by that is with technology, somebody can apply for a loan online, but they will have no idea what bureau that information is actually even going through. By using all three, we have the latest and greatest data pulls to help keep any potential prospects from slipping through the cracks. By doing so, we are actually going to see up to a 70% increase in leads when pulling data from three bureaus as opposed to only pulling from one. And the big benefit for everybody is that there are no additional costs to obtain data from multiple bureaus. We have special pricing set up with the bureaus so we can pull from all three. And with that, it's just one flat cost across the board, so you don't have to worry about paying each bureau's fees separately. So you pay one fee, it covers everybody. And another benefit is it's actually much cheaper than going through directly a bureau. Okay, so a little bit more on why we like to use all three bureaus. If you look at the graphic at the bottom, you'll see that from 1 to 2 bureaus, you're going to get from using 1 to 2 bureaus, you're going to get about a 42% increase in leads. And when using all three, you'll see that that increase is about 70% as opposed to just using one particular bureau. Although you may prefer to work with just one bureau, that doesn't mean that your account holders aren't shopping with another company that's using a different one. So your preferred bureau may not have the data or won't receive that additional data for 4 weeks or whatever it may be, which obviously won't help you when you're trying to set up a campaign now. So we like to help you benefit from what we call incremental lift by using all three bureaus and doing our best to hopefully catch everything. So on top of the credit bureau data, where is the rest of the data coming from? So we can actually do a lot of different things here. We multi-source credit and non-credit data to receive a unique compilation. So we, of course, are getting the information straight from the credit bureaus, as discussed before, but we are also pulling demographic information from Axiom. We're pulling property information from your county deeds and county records and things like that. We're pulling automotive information from your dealerships and service centers. We're doing automated valuation models for home values using the hedonic index. And last, we get persistent responder information on households from census and survey data. So with this combination, we are able to hit 1,100 different data points on around 215 million consumers. From there, we target, market, and specify exactly who we want to look at and who is our prime account holders. And we target specifically to those people. So again, when using credit bureau data, we have to do a few certain things to be in compliance. But number one, and most importantly, is that you need to specify your lending guidelines. So we are only going to market to prospects and account holders that meet your specific credit criteria. And that criteria can be based on all kinds of things, including FICO score, LTV, credit history, as well as about anything else you would want to search on. But when we do this, we have to do what they call a firm offer of credit. And we can only use this data when we do a firm offer of credit. I'll talk more about that on the next slide. We also have to be compliant with the Fair Credit Reporting Act. And the big benefit here is that we're here to help you with all this. LKCS will be here to help you out with every step and work with you and the bureaus to make sure everything is done as it should be done and is compliant and all that good stuff. We've got your back, so you don't have to worry about accidentally getting yourself into trouble or anything like that. Okay, so what is that firm offer of credit? When we use credit bureau data, that marketing material has to include the following things. Number one, we have to indicate that the recipient has been pre-selected, pre-screened, pre-approved, or pre-qualified. Those are the exact terms that have to be used. It doesn't matter which one of those four that you decide to use, just so long as it's one of them. There are also going to be terms and conditions or eligibility requirements that need to be listed or stated. So basically, what we're going to do is tell them, based on X, Y, and Z, you're pre-approved for this product. But we are also going to state in the disclosure area, why credit may not be extended after all. So just because we are doing a pre-approval campaign and we're telling them that they're pre-approved, you still have the final say when they walk in the door. They're not guaranteed anything, and we let them know that. So we basically tell them, yes, based on X, Y, and Z, you're pre-approved for this product. However, you still have to come in, still fill out the full credit application. We still have to verify that nothing has changed on the credit pull from the day we pre-screen to when the day they actually come in for the loan, as well as verify income and all that other stuff. So at the end of the day, you still hold the cards. We let them know that there's basically a 99.99% chance that they're pre-approved and everything's going to be fine. However, if anything changes and something doesn't check out, you can walk away without giving them anything, and that's okay. Additionally, we also have to state a minimum dollar amount for which they have been qualified for, and that's going to be based on the product. So you don't have to offer a minimum of anything that's crazy, but you've been approved for a minimum, such as so you can do something like you've been approved for a minimum of a $1,000 credit card or maybe a $5,000 auto loan, whatever it may be. It just doesn't have to be anything crazy. It just has to be, you just got to give them a baseline or a minimum. Additionally, maximums can be stated as well, but only saying the minimum is required. From there also needs to be opt-out and disclosure information on how the recipient can get out of receiving those pre-screened mailings or notifications, if they want to. There's information from all three bureaus that they can go out and basically say, exclude me from data pools. So it's nothing crazy there. So with that, let's actually talk a little more about what credit prospecting is and really dive into a few examples and ways that we can use this to generate business. Here are a few things that are available for pre-screened marketing campaigns. New home equity loan possibilities, new home improvement loan possibilities, debt consolidation loans, personal loans, and balance transfers. So anything you might have a loan for, there's probably a way we can pull data. So if you have a loan product that you want to look at some credit data to help get some better offers out there, just let me know and we can figure out a way to get that done for you. So again, we are going to pre-screen existing account holders or reach out to credit qualified prospects who live in your area or areas. Again, doesn't matter if they're a member or not, we can look at both sides of the fence. In order to do this, we're going to extend pre-approved offers of credit to account holders and non-account holders based on actual credit score information. Again, you get to set the criteria to identify recipients that are going to qualify for a loan. You always get to specify. I can't stress that enough. We don't limit or put any restrictions on your access to all the different credit criteria. Once we pull this, we have to send out a direct mail offer or an email offer, outbound phone calls, or even statement-based campaigns if you happen to have your statements with us. No matter how you do it, you have to reach out in some way, and we can help with all of these. Additionally, we have a reporting and tracking system called DataFlex. It's a separate piece to measure the results of those campaigns, and not just these prospecting campaigns, but any campaign you might do. It's an MCIS alternative type system, so if you have an MCIF system currently and want to look at other options, or you currently don't have anything in place, please let me know and we can talk about the system at a later date. So now let's go ahead and look at a couple of different ways to leverage credit data to actually generate loans. These are just examples, so you can really be creative and brainstorm ideas and campaigns that make sense for you and your institution. And from there, we can adjust these criteria as needed. So keep in mind that these are made up and put together just to show the basics and get you thinking about how you can use it. But again, like I said before, we can adjust this to best fit your ideas and goals. So let's take a look at a credit card balance transfer campaign. We're going to look for people with FICO scores of 620 and above. Let's say they have a revolving balance of $10,000 or more. They are using between 30 and 70% of their credit limit. I chose these numbers because people below 30% are typically using the card and paying it off fairly quickly. And the ones above 70 are typically abusing their card and could be getting into trouble. So with these numbers, we hope to get people that will have good interest revenue, but hopefully not be at too much of a risk. In addition to that, we are also going to make sure that they don't currently have any late payments. From there, get the offer out there and let them know about the better perks, rates, or whatever that may be that you're offering. So next, let's take a look at a personal loan campaign. Again, we are going to look for people with a 620 or above FICO score. We also want their revolving debt to be above $5,000, and we want them using over 60% of their credit limit. This is in hopes to find people that are motivated to transfer their debt over. Lastly, we want them to have less than 2 historical 30-day late payments. Once again, from there, we'll get the offer out there and try to get in touch with them. So here are a couple more examples. Say we want to do a home equity line of credit. Let's look for people with FICO scores that are 680 and above, have no bankruptcies, no current late payments, and available equity of $20,000 or greater. Helping the person to take advantage of their equity while also finding you qualified applicants to send offers to. On the right, looking at a straight conventional mortgage, let's look for people with FICO scores of 680 and above. They have a current mortgage balance. We want them to have a current mortgage balance of $100,000 or more, and we don't want them to have an FHA, VA, or reverse mortgage currently. We're going to also look at people whose ages of their loans are between 13 to 72 months and last up to 95% LTV, or whatever you may be comfortable with. We can look for that, target these people, and send them an offer. So these are 4 different ideas to sort of get you thinking and give you an idea of ways that you can actually use this data to your advantage and hopefully generate new loans. So when we go to get in touch with these people, how are we going to get in touch with them? Like I said before, you have multiple ways to accomplish this. Some of these include direct mail, email, or otherwise an outbound phone call. LKCS can help with your direct mail and email needs. Like from front to end, we can help you with basically every part of that step. If you need help with an outbound phone call, LKCS can help you with the script, but when it comes to the actual phone calls, that would be done on your end. So on the screen is an example of a direct mail piece. It could be a postcard, self-mailer, but whatever it might be, everything we do for you would be absolutely full color and have variable data printing. If you're unfamiliar with the term variable data, this basically means that we have the ability to personalize each individual piece. This wouldn't be 10,000 pieces of the exact same offer with the exact same rate, like everybody's qualifying for the exact same amount. Each piece is unique, and its offer is specific to the recipient. So different rates, amounts, and payment examples are changes on the fly that can give the recipient of the piece relevant. It can make the piece for the recipient both relevant and unique. A few more examples include the personalized letter on the left and a statement cover letter on the right. On the left is just a normal 8.5 by 11 letter that would get stuffed into a folded number 10 window envelope. So once again, everything is variable. So things such as you are pre-qualified for up to $35,000 that you can probably kind of see on the screen there. That changes. So the next person, it could be $25,000, and after that, $50,000. So that information, as well as the graphics, can change. Additionally, we can put a loan officer on the letter and add the phone number of the nearest branch. Whatever it may be, everything is variable and can change from person to person to best fit their needs. On the right, I brought this up before, but if you are a statement client of LKCS, we actually have the ability to turn the first page of your statement into that direct mail letter. Postage is easily the most expensive part of any mailing. So with this, you have the ability to send a letter using postage that you already had to pay for anyway with the statements. And in addition, these can also be added to your e-statements to avoid extra processing costs. All we are doing is taking the first page of your statement or e-statement and turning that into the direct mail campaign. So the letter becomes page 1, and the rest of the statement data flows to the next page, saving you the cost of sending out a completely separate mailing. It also has the added benefit of giving your members an incentive to look at their statements and see if they have any special offers. Now, another way is email marketing. Obviously, a lot of people like sending emails, and a lot like to receive emails. we can actually do the same variable data tricks with the email as well that you have seen with the other items. So we can set this up for you, or if you already have an email system in place, we can potentially set up the template and all that to get it ready. But this is just another way for you to get your information out to your account holders, especially if you already have their emails on hand. So now finally, what is the cost to do this? Well, the price of credit prospecting actually comes down to several factors, such as how many records are purchased, what are the demographic selects purchased that we're going to use, what are the credit bureau's minimum charges, what are the setup charges. Well, some things I can tell you for sure is that the credit bureau minimum charge is $750 for any credit prospecting type campaign you run. There are other variables, but $750 is going to be the base cost at the least. Now, it's important to note that this includes 3,000 records. What we like to do is run a free list count and estimate. LKCS can actually run counts to determine the feasibility and cost of your next pre-screen marketing campaign. If you have a campaign that you really want to do, say you want to target home equity loans, and you have those zip codes you want to look into, as well as know the parameters, all you have to do is give me a call, email me, or reach out to any of the other sales reps here, and we can run that list and let you know how many contacts meet your criteria. Then from there, we can look into how you want to target them, whether that be with direct mail, email, or by phone. Once we have this info, we can break down pricing and give you an actual number. So just let me know if you need any help with getting a list ran and getting some costs, because I'd be glad to help. Now that you've seen credit prospecting, I want to show you an additional service we offer called credit alerting. So hopefully my presentation has been decently effective, and by now you're aware that credit prospecting is a type of proactive marketing that targets account holders and or prospects who already or have potential to buy a loan. Whereas credit alerting is reactive marketing that targets account holders who are currently in the market for a loan product. So now let's get into exactly what that means. So here's what happens with credit alerting, is that when your account holder applies for credit anywhere, an inquiry is posted to his or her credit file. From there, these inquiries are categorized according to the type of financial product the account holder is seeking, whether that be things such as a mortgage loan, home equity loan, installment loan, or a credit card. Then your account holder database is cross-referenced daily. With these inquiries, a lead is then generated each time a match is made, giving you the ability to respond with a firm offer of credit immediately after receiving the lead. So now that you know how this works, you're probably wondering how we go about setting it up. So it's pretty easy, but first you need to select which of the categories of inquiries that you are hoping to target. Once this is known, the leads are then pre-screened using your selected qualification criteria. This can be based on a number of attributes, including credit score, debt-to-income ratio, and many others. From there, daily alerts are sent in one file and contain information for all three of the bureaus, Equifax, TransUnion, and Experian. We then provide you with a list of leads, as well as fulfill any obligations for direct mail or email offers on that same day, making this a streamlined and efficient way for you to market to those currently in the market for a loan. So lastly, let's talk about price. So similar to credit prospecting, it's really pretty difficult to give you a general number without first knowing some details. What I can tell you is that the cost is based on a number of account holders and or prospects screened each month, as well as setup charges. And similarly, for no charge, LKCS will review your account holder credit activity over the past 30 days and provides you with the following data: credit activity by inquiry type, state and credit bureau, as well as qualification rates using your specific qualification criteria. Once again, if you have any questions regarding anything about credit alerting, don't hesitate to reach out to me or to any of the other members of our LKCS sales team if you need to get any information or want pricing. So with that, that's all I have for you today. Thank you very much. Once again, my name is Jake Dudek, and thanks for giving me the time to show you what we have to offer. I'm going to remain on the line for the next several minutes to answer any possible questions or concerns you might have, so feel free to send them, and have a great day.